This is ShadowQuant Forex Edition, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Monday, August 10, 2026, and this is the After Hours session. Now, let's get into it. Fear is at a 7-year low. The Fear and Greed Index is stuck at 14 out of 100, a reading usually reserved for panic attacks, not summer lulls. Meanwhile, gold $4,326.27 is trading near multi-month highs, and the US dollar is holding a defensive line against a backdrop of sticky inflation and geopolitical friction. As of 19:06 ET on Monday, August 10, 2026, the market isn't just cautious, it is defensively positioned. Welcome to the ShadowQuant Forex Edition After Hours. Let's look at what the data is telling us right now. Looking ahead, the schedule is sparse but potent. On Tuesday, August 11th, the Reserve Bank of Australia meets for its rate decision, the only high-impact monetary event on the horizon. That decision will arrive alongside a slate of U.S. data, initial jobless claims and producer price index on the 13th, followed by retail sales and business inventories on the 14th. But for the next 24 hours, all eyes are locked on the Reserve Bank of Australia announcement and the broader risk-off posture driving capital into safe havens. Here is the snapshot as of right now. We are seeing a distinct bifurcation in flows. Gold is at $4,326.27, down slightly from its 5-day high of $4,371.96, but well above the mid-range. The US dollar index is supported by leveraged funds holding a net long position of plus 4,438 contracts. In contrast, the Japanese yen is under immense pressure, with leveraged funds carrying a staggering negative 60,825 contract net short position. Commodities like silver are tracking at $63.64. The broader market vibe? Risk appetite is effectively zero. The VIX is compressed at 14.9, yet the fear gauge is screaming. 3 headlines are defining the noise floor tonight. First, the Reserve Bank of Australia is set to hold rates, though markets are hunting for fine print clues. Second, Cleveland Fed President Hammack has broken protocol to argue that the Fed should already be raising rates, adding fuel to the hawkish pause fire. And third, unconfirmed reports of cruise missile launches from Syria, Iran, have pushed the Hormuz Strait deal off the table, sending a direct bid into gold and oil. How is this reshaping the map? It's reshaping the entire definition of safe. We are witnessing a hawkish pause paradox. The Fed funds rate is frozen at 3.63%, yet Cleveland Fed's Hammack is openly advocating for tighter policy because core PCE remains sticky at 3.29%, and CPI is at 3.46%. This contradiction is forcing capital into the dollar not because growth is strong, but because inflation is stubborn. Simultaneously, the Reserve Bank of Australia is walking a tightrope. With the Australian economy showing weakness, any hint of dogma from the Reserve Bank of Australia this Tuesday will cause a violent repricing of the Aussie, especially given the plus 40,637 leveraged longs already parked in that currency.
And that tightrope walk is visually represented by Aussie dollar compressing at $0.70. We are sitting just $0.
That wraps up this edition of ShadowQuant Forex Edition. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.